Welcome back to the channel. Wishing you a great day wherever you are around this beautiful planet of ours. And today on our planet, it is December 1st, which means it is time for our Bitcoin and economic forecasts for the month. We're going to recap the last several months as this is a macro series on the channel. So make sure you are subscribed with the bell notification icon and of course, like up the content as well, or wait until the end where I'll remind you again in case you want to see what the deal is all about here. So we are going to recap the last few months because I just don't want to be throwing more hot air out there into the space, as there is plenty of that already with people calling the bottom all the time without recapping exactly why and how we came to that decision. On top of the recap, we are going to cover the traditional markets as well, getting deep into the S&P and other major indices across the world, as these have been driving forces for the cryptocurrency market. And now if you are a new viewer of the channel, you might note that I have a little bit more of a bullish bias for the macro than a lot of other people, but this is for very good reason, especially when it comes to our timing and our cycles. Everything is still on track for another big move up into the mid 2020. So stay tuned for that, exactly why and how we've come to that decision as well. As this is a macro series on the channel, we need to recap what we've seen before. And this is the predictions or the forecasts that we have looked at for that particular month. August, we were looking at a range-bound month, difficult for trading. It happened to be slightly better for trading, but it was still a range-bound month and it was difficult overall. People calling for lows in the market and new altcoin seasons to begin where people are buying into alts. What we've seen from that point is a lot of altcoin buyers have been absolutely destroyed. That's what I want to try to prevent for you guys, especially in these particular types of videos, looking at the macro here. September, same sort of deal. Range bound, difficult trading, was not a time to be buying altcoins for the long haul. October came around, we had a call out for buy Bitcoin in the buy zone. I'll show you that chart as well. Trading opportunities with increased volatility. Because the volatility was increasing, we got better trading opportunities. Then came November. We've now closed off November. We can start the new month. The calls were buy Bitcoin in the buy zone. Fantastic time for that. Trading opportunities with increased volatility. Definitely got that as well. And we thought maybe we'd see a green month. That's why I haven't ticked it off here, because we're looking for a green based on the past. But for Bitcoin, it obviously was not green. But for the S&P, very, very big green month. For the traditional markets, the indices, very solid green month, especially when a lot of people were calling for massive further downside and targets to collapse the world. Okay, so that's the recap of what we were just looking at over the last several months. Moving forward to now, December. Well, we've just started the new month here. We've got a little bit of a green already, but just recapping or having a look at the last Decembers across the board for Bitcoin. All of the yellow arrows are essentially the red months that Bitcoin has faced in its history, and the rest of them without the arrows, basically the green months there. So Bitcoin's seen 5 red months in December, with 2 of those being severe and 7 of them being green. So if you just look at the probabilities there, it's almost 50-50, but with a slight bias to the upside of the green month. But what we've seen within these particular periods, looking back at 2018 and then also in 2014, which is probably more similar to what we're seeing for Bitcoin now, it may be a red month, as you've seen with each of these cases. 2018 looking the most similar here, with a big drop in November. At least emotionally, it was a very big drop, and financially, it was a very big drop. Whereas for November this time around, emotionally, people were all over the shop. If you were here, you know that yourself. But in terms of a percentage, 16.2%. Go back to December of 2021, and we had a larger drop then. So it was a 19% drop, but people were scared, but they thought we were going to go up to new all-time high prices from that point. Very, very convinced still of $100,000 Bitcoin. And so that you can see the stark difference between the times in the market. When it's a bull market, you can't convince anyone that the market can go down. When it's a bear market, everyone thinks it has to go lower. So just looking at this particular chart here, looking at 2019, 2018, after severe or significant drops from November, you can often see December go maybe slightly lower, but then have a little bit of a bounce back from that point. Maybe it's still a red month, but you can see the closing differences between the months is very, very slim. In this case, 5%. in the next case here in 2018, it's only 7% from the November close to the December close. And so maybe we're in a similar sort of period here because of the timing of the cycle as well. We've gone down for just over a year, 376 days from top to bottom. And you can see that the timing is really balancing out quite nicely here between each of the cycles. And so if November isn't the low, December may not be that much further from the bottom. So just as a measured move, from the low of November to the low of December was about 10%. So if we did the same thing from the low of November, 15,400, take about $1,500 off, you might get a low of about 14K. So that's still all lining up relatively well for the cycle, and it's not that far off. So to get extremely fearful of the markets at this time is probably not doing yourself justice, considering all of the factors at play here, especially with the S&P as well, which takes us to the traditional markets before we get a full recap of everything going on here. S&P, this has been a major one for cryptocurrencies in terms of how and where and why the markets are moving the way they do. The main difference we saw here for November for the S&P and Bitcoin is that November was a very strong positive month for the S&P, but for Bitcoin, of course, we broke down. It just seems that the timing wasn't quite right there for BTC. So there are a couple of different theories going on right now, depending on where this price will peak out at. And just as an understanding of why we're thinking this at this point, we've got the 18.6 year cycle here. And so if we're just measuring from the mid cycle to the end of cycle, we're probably within that 7-year period now. We've basically started that 7 years from somewhere around that 2020 low that we saw. And so we can start to look forward to the next few years ahead. Now, if this is the first time you're seeing it, we will continue to recap this on the channel as well. This is our macro view of the market. So although it may not fall exactly in that year, remember, we are looking at approximately 18 to 20 year cycles here. So give or take, just like you would with any sort of monthly cycle, weekly cycle, daily cycle, hourly cycle, give or take either side. So 20-year differences here for the mid cycle. We saw that around 2020, we got that low. This is for the land and the economy, not so exactly for the stock market. Just keep that in mind as well, because I often see comments about that. So moving into this peak, we're looking towards somewhere around 2026. The reason I say that is you can see the tops in the past have been around 72, 89, 2007. This is for the land and the economy, remember, not just the stock market. So don't go and pull out that stock market chart because the stock market top was 87. Basically, you can see it was about 17 years and then about 18 years here. And of course, in previous cycles, we've seen approximately 20 years as well. And sometimes they extend to 21 or 22. So adding roughly 18 years to the 2007 top brings us out to about 2025. Of course, if this extends a year or two, throw it out to about 2026. But so far, everything is still on track for this particular cycle, which is why we're still seeing the low forming in the markets right now, with the October low potentially being the low or very close around that low. And we've said that since June, because you can see the market really has struggled to break below June and close below it for any significant amount of time. The June low was 36.39 here on the minis. Basically, the June low has yet to be really tested. We've got one test here, and moving into quarter one, which we'll continue to recap here on the channel, maybe we'll see a bit of a higher low form here. So that's what we're expecting moving forward into this next stage. And should that happen, we get a peak out in December, which has happened in the past, then we'll definitely see the news and the media and the doomsdayers and the fear get to extreme levels again. All of that craziness will continue. And so there's two scenarios I'm looking at here for the next low to come in. Of course, we're talking about December here, but we really need to drive the point home about quarter one as well. December may see a peak in the market, but in terms of that next low, it could look two ways, I think. Higher low or a lower low. Pretty straightforward. I don't think there's any other option really, unless you get an exact figure of the previous low. But anyway, the higher low could be something like we saw after the dot-com crash. So we got the dot-com top, the dot-com bottom here, and then you had that higher low form in quarter one of the following year, basically March. You had the low here in October, very, very similar to what's going on now. The market takes off without everyone even understanding why. The next low, the GFC, you had the low in November and then the following low in March again. This time was a lower low. You only had one slight close under that, and then the market took off without everyone understanding why again, people calling for more downside. And so if this is to repeat at a very similar time in the market, maybe we are setting up for something similar to what we saw in 2002 bottom into 2003 bottom. Either way, even if this is to happen as well, and you get a nice fast move out, it's still very, very strong overall for the market. And why this is important for Bitcoin is because if we start to switch to a risk on environment, everyone's getting greedy again, wanting to get into the markets at the bottoms, which is fantastic, where the strength actually lies, then you could probably see that happen for BTC as well. And we just don't know whether Bitcoin is going to have a bottom similar to 2015 yet, where we had a lot of time to be entering the market, or something like 2019, where we did have still a few months to enter, but everyone was still way too scared, and they only started to get in once the market was up 300% from the low. And this was a very, very fast move out of the low. I remember it quite vividly. That's a look at Q1 of 2023, and we'll continue to update that next month. But that's important to understand now, especially for December, as we may be seeing some further bottoming here and understanding the Christmas rally that could be ahead as well, which we've seen every other year in the market, where you start to get this little bit of a move up just in time for Christmas. Maybe it lasts a week or two, and then the market starts to roll over again. Either way, we're still within this bottoming process, and none of the analysis has changed. The timing and the price structures are still all within play. So that leads us to the major topics. So this is the first summary. The major topics now are that this is not the time to be fearful. We've covered why when it comes to the S&P and traditional markets, the economy, even though there's a lot of bad that seems to be going on out there, the wars, the potential of freezing over in Europe, which is essentially just the headlines, but we are seeing a lot of strength happening within those markets, within the stock markets of the UK, of Germany, the biggest markets in Europe, which is crazy when you compare that to what the news is saying. So now is definitely not the time to be fearful. Always review this in these conditions in context of the cycle. We've looked at the 18.6 year cycle, where exactly we are and why. Number 3, short-term FOMO. I mean, this could last a few weeks. Maybe it lasts into the early part of January. This is what we've seen in the past over the courses of the Christmas rallies. Basically, markets running up maybe just before Christmas and then essentially rolling over at that point. This can be reasoned with companies and individuals taking profits on their stock or selling out in time for the tax season and then buying back in the new financial year. Number 4, bottom process may take 3 to 6 months. So if we've got that low in at around October, we've looked forward to approximately March time where another low could form. Higher low, lower low. It's going to depend upon where we get this top coming in next. Number 5, altcoins will begin to signal strong versus weak. And I definitely can see that happening in the markets already. Compare the altcoins against their BTC value. If Bitcoin goes on this run in December, we've looked at the possibility of it being a slightly lower low, but maybe a bit of a Christmas rally, then we should see the weak altcoins bleed against their Bitcoin value. So it's the alt versus their BTC value. Don't worry if that doesn't make sense. We will follow it up on the channel here as well. It's a big one here to understand which altcoins are going to do well in that next stage of the cycle, which ones are going to outperform Bitcoin and reduce your risk in the market as well. So I was talking about a historical buy zone here for Bitcoin, just as another recap. These are the levels here. Under that 19.5K seem to be a reasonably good time. We don't have the confirmation of that just yet. So if you don't want to DCA in until there is further macro confirmation, then I would be waiting for breaks above 20 and 25 being the current monthly swing tops, the major ones, and then the bear market downtrend as well. In the past, we can see that underneath this level has been reasonably good time. So that was underneath the 5K zone all the way down to 2.5K, and then a slight dip in here again. So every time in history so far, this has been a reasonably good zone, and you've had approximately 5 to 9 months of buying opportunities. If we measure it from this first time here from June, it means we're into our 5th, 6th month already. So there's only potentially a few more months to go, which also works over into that Q1, maybe March being another bottom. We get a bit of a run up here, finally break the Bitcoin bear market, and then come back and test the upper side of the bear market trend. And we start to work our way out of it over the course of the next stage of the cycle. So lots of big things to happen, I would say, December and Q1 of 2023. based on historical cycles, based on the price already of the markets, basically the drawdowns and the support and resistance levels, and of course the traditional markets as well, all showing reasonably good signs for now. So as for the December predictions, red or green, possibly green based on the history. However, if it is a red, I don't think it's going to be that much lower than December, similar to what happened in 2019 and 2018. We've seen lows for November. Maybe we get slightly lower, but overall, I think it's going to be okay for the longer term. Actionable steps for the market. We've seen Christmas trading rallies before. We're probably going to see it again, especially after such a big volatile dump. We should see a little bit of upside, and we've already started to see that. Maybe it's earlier in the month because of the volatility, so stay tuned for that. Action for the longer term investors, avoid the FOMO, remain the course that we've talked about here for months. And in terms of the longer term investing, you saw the buy zones there. Let's continue on with that throughout this part of the cycle, this accumulation bear market period. So note regarding the altcoins, if Bitcoin does get some strength on, the weak altcoins are definitely going to bleed. So for me now, it's not the time to be investing in altcoins. Watch the S&P and the USD for signals on the macro scale. You want to see the USD start to come down in a macro sense so that things become cheaper again, and you want to see strength to the S&P. The money printers do not have to turn on for the S&P to get strength, because I don't know why everyone forgets this. The banks can create money. Just think back to FTX. They created a whole bunch of money out of nothing. They made it up, sloshed it into the markets. Markets can go up. The banks do the same thing in the traditional system. Everyone forgets this, and they think the only people that can adjust this is the Fed. Completely wrong. Important, another low will come. Is it going to be higher than November or lower? Either way, close is going to be important here. And I dare say we'll probably see something into Q1 of 2023. Fear is going to be extreme at that point, again, if we get that low come. But I think the bottom is still forming through that period. And then towards the second half of 2023, you'll see those prices rise and all of that fear start to subside. And with that, don't go anywhere. Plenty coming up during this bear market. Like, subscribe, bell notification icon. Check out the videos popping up on your left-hand side here for more macro analysis of the market. Set yourself up and check out the links for TIA Alpha Report down below. I'll see you guys at the next video. Until then, peace out.